I'm Travis Duane with CMG Mortgage. 3 months ago, I was sitting on the couch changing diapers for my wife, Andrea Crabtree. She's been producing with CMG Mortgage now, and I listened to her on the phone, and really, she's got this product called the All-in-One Loan, and I really want to talk about it. I think this is just changing the game of mortgages. I feel like Texas doesn't really know about this product. I feel like with Andrea being relatively new to CMG, the market doesn't really know about this product in Texas. And so I want to add a little bit of credibility to the product. So I've been hounding recent recipient of the 2022 Housing Wire Insider Award, VP Finance for the All-in-One Loan, the man, the myth, the legend himself, Dave Herbst.
Thank you so much.
Congratulations and welcome, Dave.
Thank you. Appreciate it. It's good to be with you.
Yeah, thank you. So I want to talk about what this all-in-one loan is. I market it on Facebook. I do the best I can showing people what it is, but it's just so outside the box and it's so revolutionary. And it's been in Texas such a short amount of time for primary purchases. I feel like people just don't know about it. So what is the all-in-one loan, Dave?
Yeah, you're absolutely right. The product is not new. We've had it available in the United States since 2005. The use of it for primary residences in Texas, in the state of Texas, was sort of the last frontier for us in terms of rolling out the product and structuring it to be able to comply with constitutional, rules centered on this type of lending down there. And we're happy to have it launched finally. And I think you're dead on. I think that there's a lack of awareness or understanding about what it is. But I also think at the same time, and I believe you're probably, feeling this now in your business, that there's sort of this pent up demand, right? This sort of excitement, because Absolutely. I think a lot of people haven't had access to their equity money as freely, or that kind of control that it provides. So briefly, the product in concept is the marriage of the mortgage and personal banking. It's the consolidation of those two everyday things that most people need to utilize together in order to make better use of idle money. How do you use idle money better? Well, instead of letting idle money, meaning your earnings or just cash savings that you're building up for a rainy day, instead of allowing those dollars to really reside in the traditional bank accounts where yes, we have secured access to those dollars, but if you think about it, we really get very little return for the storage or the use of our accounts. In other words, there's not really a rate of return, an interest yield or gain. We don't tend to think of our cash accounts as being investment accounts. When you really step back and think about the volume of money that passes through our everyday checking accounts, it's a lot. Most people in America will manage more money in just 5 years through those accounts than they actually own their house.
It's just such a staggering number.
It is. And it really makes you think and go, gosh, where did all that money go? I would actually add to that, saying that because there's no real tangible benefit of kind of keeping money around and storing it and building it up there, I think people just generally sometimes make bad decisions. They overspend, right? I think we can all relate to that. You just kind of spend extra because there's no real benefit of kind of keeping it around. You have some extra cash. And occasionally we buy things and do things with those dollars when maybe that little voice in the back of our head is saying, hey, you don't really need that. But then again, there's really no benefit of kind of keeping that money around. The all-in-one loan, I think, changes that paradigm a bit. It's structured to allow a customer to use those dollars freely to reduce their mortgage, the size of their mortgage easily, and the cost of their mortgage, right? Because the cost of financing is, highly based on what you owe, how much you owe, and how long you're going to take to repay those dollars. Right. Interest rate, of course, plays a role, right? Interest rate matters on debt, but what actually impacts the cost of borrowed money even more is the amount you owe and the amount of time you take to repay that. So what the all-in-one loan does is it just marries the cash, the income, the flow of money in with the mortgage, so that borrowers just simply have an easier time without changing their budget to just simply reduce the size and the cost of their home financing. And that really helps people out.
Thank you for explaining that. I appreciate you. So we've had this loan in Texas for a while, though, for an investment side.
That's right.
So can you talk briefly about how the average investor, and I'm not talking about a seasoned investor, I think that there is a market for people that really want to be investors. They just don't know how to change their daily habits to be able to leverage that kind of money, to be able to afford that second home, to start that journey. Right. So how can the all-in-one loan really sort of help that client?
Yeah, you're right. We have had the program available in Texas for investment properties as well as second homes. And the structure of the product is really what I like to refer to as the standard or the original all-in-one loan, in which is available in all other states. Just the primary residence in Texas is slightly different. But for investment properties, the all-in-one loan is just a brilliant way to manage that debt and the use of equity or the liquidity aspect of it. So briefly, let me touch on the structure of the product, right? So we understand the concept, which is to use regular cash flow to reduce the size and the cost of the debt. But we make that possible by really sort of re-engineering the mortgage. It's not a standard closed-end amortized mortgage product, which is just really a simple, repayment plan. That's all it really is. Instead, what we did is we designed a 30-year draw home equity line of credit. So a first lien position, home equity line of credit that allows 30 years worth of draw access when it's applied to an investment property.
And that's compared to a 10-year HELOC traditionally, correct?
I was about to say, traditionally people are very used to 10-year draw HELOCs, and then it restructures into a regular amortized payment. So if you think about it, regular HELOCs aren't really engineered to help deleverage debt. They're really designed and sold and used to leverage debt, which I think it makes sense sometimes. Sometimes it doesn't. But either way, they're sort of engineered to only have near-term access to money, and then you've got to change the product itself likely within that 10-year span. We didn't want to do that. We wanted to create a very flexible financial instrument that people can use flexibly over a prolonged period of time. So it's a 30-year draw line of credit. And another key factor of the product is that it, aside from the fact that it comes with a bank account, right? So you can flow your income through it, but it also recomputes interest nightly, every 24 hours at midnight, simple interest on whatever the principal balance is outstanding. It's recomputing nightly. And at the end of each month, each day's interest from that month is the interest payment, becomes that interest payment for the mortgage. And that's not due until the 21st of the following month. So this is exactly the opposite of forward amortizing loans that preload interest first. It's also different from a traditional HELOC in that we separate out the principal reduction from the interest payments on the loan. And this helps really kind of springboard, if you will, the benefits immediately out of the gates, where people begin saving, compounding their reduction of interest, compounding or accelerating their equity gain in the property. For real estate investors, and as you put it, not necessarily the seasoned investor who's used to leveraging, but those people who realize there's opportunity today, there's opportunity right around the corner in real estate. And arguably the products that we've had available and access to, sometimes make that unsafe, very kind of uncomfortable leveraging money. Right. If you think about it, you got to take cash out refinance on one property and maybe use that. And so you've got a higher debt level that is going to be a slow, sluggish repayment, costing you money. And that's a hard way to go leverage. And additionally, a traditional HELOC also, again, as we just covered, is sort of a short-term, benefit or advantage. And then you've got to do something again with it. The benefit of the all-in-one loan is that you're flowing your rental property income directly into it. You're flowing your personal income directly into it. You're reducing the principal balance on a daily basis in which interest is computed on. You're building equity more rapidly. So it makes it much more comfortable sooner in life to turn around and write a check for repairs, for down payment on another property, to build their portfolio out slowly, wisely, make better choices, timely choices, without having to go chase interest rates and without having to go get another loan all the time. I think that's the biggest benefit of the product, especially for those people who want to get more active in buying real estate. Total access to the money while still paying down the equity. I mean, it sounds pretty flawless, to be honest. And so I'm an investor. I purchased my property. I'm on year 5. I'd like to write a check and go buy another property. Is it that simple? It is. It's your money. Yeah, you have access to it. So when we approve the line of credit, and that's based on underwriting, right? We follow industry standards, Fannie Mae based income qualifying standards and requirements for documented income. We do have some added features to it that actually really are tailored to the all-in-one loan customer, such as asset depletion, where we can use assets to also help qualify without having to pledge the assets and things like that. But it's very creative and sort of aggressive, but for the right customer, right? People that do a good job of saving money, whether that's retirement or just cash and whatnot. It helps them qualify, especially the self-employed. So you're 5 years into it, you have money available in the line of credit, because what we did is we've approved you for a credit limit, right, up to the qualifying maximum,
Right.
if you chose to do so, right, which is 75% on an investment property, 80% if we apply this to a primary residence. So if you have this on your primary and you're now looking to go buy a rental, right, and maybe you have enough equity in your primary residence and your all-in-one loan line of credit to write a check for the down payment, or even more than the down payment, you could also finance the rest of that purchase with another all-in-one loan. Comes with its own bank account, its own checking account. The checking account that's linked to it is sort of the conduit to get money in and out of it, right? And that's what makes it very easy and safe and secure to control your principal balance and keeps your money liquid. But yeah, you're 5 years into it. You've got equity available. You can write a check right up to your limit, and no questions asked. It's yours. And then you still got a financial vehicle to pay that back down swiftly, right? So you leverage and deleverage rapidly. That's the whole point.
And so on this loan, you're just paying interest only, and that's interest in arrears from the month before. And that's paid on the 21st of the month. And programs. This is an ARM program.
It is. Yeah. Let me kind of also add to what you just said briefly. So when I hear interest only, I say yes. Technically you could just use it as an interest only loan for the first 10 years. After the 10th year, we begin to reduce the credit limit. Every single month, evenly over the latter 20-year period of time in the loan's term. This is how we safely and effectively reduce the borrowing limit to help people pay down and pay off. Worst case, by the end of the loan, the maturity date, right? But in the interim, the customer has the ability to pay principal first. So I want to just add to that. So the real description of the product is, yes, minimally, you can treat it as a interest only loan. Interest payments are a separate event, based on each day's computed interest from the month that just ended. But anything you put towards it, any time, any amount of money, any frequency, any calendar day during the month, all of it goes to principal. So it's also, technically the only principal paid first mortgage product in America as well, which is a huge benefit. But you're right. So it is in terms of the terms of the product and interest rate structure, it's not a fixed rate loan. To be a fixed rate loan, that means that the lender takes on risk with locking in a rate for a long period of time, even though their own borrowing costs are variable, right? And a lot of people don't realize that. A lot of people think that banks and lenders borrow money and are able to lend money out on fixed rates because their own costs are fixed. That's not true. The whole banking system and secondary market system, Wall Street, it's all variable rate, structure. So as lender borrowing cost goes up, fixed rate mortgages not only become less profitable, but they also really become sort of risky on the balance sheet in a sense. And so what we did is when we set forth to launch this product, we didn't want that variable to exist. We wanted to reduce the risk in borrowing and the cost in borrowing money and also lending money. So we created a rate structure that is just aligned with industry variables or costs. So we do leverage an index called the 1-year CMT, that stands for constant maturity treasury rate. And that's the baseline index. It's a monthly variable. We can only update it on the first of every single month. And then beyond that, there's a margin rate, a percentage rate that the customer has a variety of choices in securing, and that gets locked in. That's fixed. That doesn't change. And then we offer 3 different rate terms. We offer a 1-month adjustable where the index plus margin equals the rate, and that can change based on the index movement each month. Or the customer can also lock in a 3-year fixed, and then it turns to a monthly, or a 5-year fixed, and then it turns to a monthly. And in case you were wondering this, the most popular term option is the 1 month. People realize that gravitate towards this loan that, the interest rates on debt aren't anybody's friend, as I like to put it. The goal is zero. How would you like a 0% mortgage? Well, the way you get to zero faster is by eliminating principal sooner, right? And that's what this does. So the rate can fluctuate, but the rate is less of a benefit or a factor on this product because it focuses so much on balance and time reduction.
I think this thing, it's got so many benefits. As the rate environment is climbing now, we're starting to see the high sixes. They're not stopping. So, how do we take this all-in-one loan in Texas to the mainstream audience? Because I feel like this is a way for everybody to really, the financially responsible. We've got money left over at the end of the month. We need something to do with it. Well, I mean, this is the perfect tool for that. I kind of consider it the Swiss Army knife of mortgages, to be honest. And I think it's so neat because an investor can pick it up and use it one way. A normal consumer can pick it up and buy a house and use it a totally different way. But the end goal really is to pay down that mortgage fast and really just save so much money on interest. I've been playing around. You guys have a simulator online. It's just allinOneLoan.com. You go to calculate savings. They have a Texas specific section you can click on. Anybody that knows anything about their mortgage can just go through this and actually do it themselves. Okay, so taking this loan out into the current market environment, what does that look like?
I think it begins with forums like this one. Honestly, we're a 29-year-old company. Right now it's the month of September in 2022, and we're just past 29 years old. We're a family-owned and operated organization, one of the largest privately held lending firms in North America, and in fact, probably on the planet today. And that's allowed us a lot of agility, as we like to say, athleticism. One of the things that we've realized over time, being who we are from the top down, is education centric. We really, I think, pride ourselves in understanding not just the market and the market demands, but people. It's all about people, and I think people do a better job and they make better decisions if guided, right. And instead of, sure, you could go get a mortgage online. You could go apply for a mortgage in 20 seconds and begin the process with lenders. You could do it with us, but it's just not our forte. We're not an inbound call center. we've grown organically, and it's all about the right people in the right markets, educating, their partners and their customers, and just, fielding relationships that way. And that best serves, everybody. But specifically, it also helps people digest information on this product. It's new, or newer, I should say, to people in terms of an idea. And so I think people find great success with it because of our effort. So putting it to market is really, an effort that, we believe is necessary in educating the customer. And I don't think a lot of lenders do that. And there's a lot of great companies out there. Don't mean to minimize the benefit of the industry and the effort the industry goes through. I'm just saying that I think customer education is one of those things that, financial literacy, like whether you choose an all-in-one loan or not, doesn't it help to learn why interest rates do what they do, how these economic cycles, what influences the monetary policy set forth by the Fed and how that impacts mortgage lending, the secondary mortgage market. You really don't have to go too deep into detail to help customers, gain a little bit more perspective. That perspective, that information helps them make better choices, period. And I think that benefits everybody. And that's how we stand apart, frankly. I think the effort we put forth, makes us look different. We definitely are different. And so this loan it requires that, I think. I think the interactive simulator, which is a requirement in underwriting, every single customer scenario is ran through that. That's a test of suitability and financial benefit compared to a traditional mortgage. We want to make sure that there's, obvious forecasted success and benefit with every single scenario. So it's important to us. We today have no reported losses, 17 and a half years nearly of offering this product. No reported delinquencies, defaults. So it's a high performing mortgage. It is. And it helps people pay down, just gain greater control and financial, security. And I think that's what people, especially today, there's a lot of uncertainty. Let me add this too, real quick. My first all-in-one loan that I got into personally back in December of 2005. So about 6 months after we released the product, my fully indexed interest rate on the product was just over 7%. It was about 7.25%. That's not that long ago. That was during the original refi boom that we call it in the industry. 30-year fixed mortgage rates were in the high fours or so, and everybody around me was like, what are you doing? What are you getting out of a lower rate 30-year loan into this thing you guys created? Well, most of those friends and family members all have an all-in-one loan, and many of them have paid off a few times over using that same mortgage. And they thank me routinely for the advice and the direction. It's allowed me personally to actually deleverage and pay down aggressively, but also acquire real estate. When it made sense during the financial crisis, prices came down. There was opportunities, and I was in a great position that allowed me to do that very freely. And so it's just that mobility, that financial independence and security is, I think, extremely important, regardless of the rate cycles.
Absolutely. And I think it's just such a neat thing, because my wife and I are refinancing into it right now. The way that we're going to be using it, we're going to funnel all the money into it. We'd like to pay the home down fast, but furthermore, we want to use the HELOC portion of it because we're going to be doing some renovations in the house. So, we're going to refi into this thing, and then we're going to have the ability to draw off of this. We're going to be putting all of this, we've got some savings. We're going to put our savings account into this product. And I mean, fully committed is how I view this product. I mean, you have to be fully committed in order for this to work, right? You
have to be fully committed, I think, for really any financial tool to be beneficial for you, right? You can't just kind of halfway go through something and expect some great results. You've got to utilize it, so it's not a requirement to use it as your primary banking engine, but it certainly provides an option that clearly seems better. The question really comes down to this: would you rather continue to flow an enormous amount of money through accounts that earn close to 0% in return, or utilize those dollars, the float, the benefit of daily float as it waits to be spent? The bulk of that money will be spent towards standard living expenses, but you don't pay all your bills on one single day for the month. You don't go grocery shopping once for the entire month of September. Those are weekly expense needs. So we kind of spend money slowly over the weeks and months. Sometimes money just loiters around for weeks on end, waiting to be spent on something. So would you rather that money earn zero as it sits there close to zero, or would you rather actually go towards something that now has a higher use and saves you more mortgage interest than can earn you in interest in a regular account? That's the benefit here. That's the choice. It's not a requirement to use it that way, but boy, you really maximize the time value of that idle money while you have it in your possession before you need to expense it. And then you start to make, it's all visible. So you start to make better choices. You mentioned the renovation you guys are going to, start on. I think one of the coolest things about this loan and using it for that is that you really get to cost control. I think most of America went through some sort of renovation over the last 24, 30, 6 months or so, especially during COVID. I think outdoor pool construction was at its all-time high, for American houses and during COVID. And, but think of the standard way we do that. We go get a second lien on our home, or we go through a cash out refinance and then take on larger debt. So you have this lump sum of money and debt that you're expensing. It's really hard to control the cost when you have such rigid financial tools to do this with, right? They seem to just set you back further, where you don't really, have weekly control of what you need to spend or want to spend. That may change in 2 months, right? You may say right now, we're putting $60,000 into a kitchen, but in 2 months you may go, whoa, hold on a minute. Let's back that down to, 35,000. Or maybe let's wait till next spring to kick that off. Well, that optionality is valuable. You'll be able to do that, with this product and make those timely decisions based on, your economic or financial kind of comfort level. That's valuable.
So you talked in the beginning about a lack of motivation to use that account, and the more you've talked, the more you've just created a total motivation to use the all-in-one loan account and leverage your money and really kind of take control back of your mortgage.
That's right,
and of your finances, which is just so amazing. So, Dave, I think that's all I've got for you.
Yeah, well, good. I mean, I think this is a great way to begin to express the fact that it's available, especially in the state of Texas for homestead primary residences. First time in history, we're making history, and it's great.
I love it. I'm glad we're a part of it.
Yeah, me too. Let me know how I can help you guys grow, and I look forward to our next one.
Thank you very much, Dave.